Hi, my name is Diana, and I'm going to present ICE Intercontinental Exchange for a buy. The company was founded in 2000 and is headquartered in Atlanta, Georgia. They make his revenue from charging a transaction fee and also charging fees to traders to get real time information and data. It trades 9 asset classes and has 13 exchanges globally. And they own NYSE, which is the largest stock exchange. They divide the revenue between trading and clearing. That's 49% of the revenue, and data and listing. The trading and clearing includes energy futures and agriculture futures and options, and then the data listing includes the sale of data to traders. For the management and recent news, in early in March, NYSE temporarily closed its trading floor to help combat the spread of COVID-19. This impacted the money makers and the brokers. Now the money makers were already 90% electronically, so it didn't have a lot of impact, but the broker community was impacted because although they're still doing everything electronically, a lot of the value comes from the information they're able to provide to their clients at the time of sale. Then another news is that ICE Data Services launched market-based index to track and benchmark the global price of carbon. Now, one of the reasons why I think this is a good investment is because of Bakkt. So they acquired Bakkt in 2018, and Bakkt is a trading platform that primarily offers Bitcoin futures. Now, the interesting part about this is that they are going to launch an app this summer that it will convert all in-game assets, rewards, digital assets, and crypto to cash. And last month, they made a deal with Starbucks that they will accept Bakkt as a method of payment. So people are gonna be able to pay with Bitcoins to purchase a Starbucks coffee. So now the SWOT analysis, one of the strengths is that they have clients from 120 countries. And I think the most important here is the threats that they have, because it's a very competitive industry, and they also are subject to a lot of government policies. For the competitors, as we can see here, they have a very average PE ratios. The only metric that is not the best for ICE is the dividend yield, that is the lowest one between their competitors. But they have a very high operating margin of 52.2% and a high return on invested capital of 11.3%. The risk analysis, the condition in global financial markets is a big one right now. However, the Fed has been giving money market mutual fund liquidity facility to financial companies to make sure that they're able to operate. And also they are subject to policies from different countries, including Singapore, UK, and the US. And politics have been talking about a financial transaction tax that will impact the revenue, because a lot of the revenue comes from high frequency trading. And this high frequency trading are are people that trade just between minutes, and their gain or loss are as little as 2 basis points. So in case we have a tax for this, people would probably not do it anymore. And another risk is the change and new regulations, as I say. And the market volatility can benefit them because they get money from the volume of the transaction, but also when market is like it is nowadays, people lose confidence to financial companies. And then their Bakkt acquisitions, because it's such a new platform, that can be unexpected costs, and also they might not be able to detect any type of illegal transactions or any tax fraud. So that's a risk they have. For the growth analysis, because of the market conditions we are right now, I projected a 2% growth for next year, although the compounded annual growth rate is 6%, and then after year 2020, it will grow at a rate of 6%. But the ratios are gonna be steady for the next years. For the valuations, I did a DD model with their dividends increase 20% for the last 3 years, but I projected a 7% increase in revenue, and it came with a valuation of $92, and the current price is $88. So that means that is 4% undervalued. Now I added this aside because today they shared their first quarter results, and it was pretty good. Their revenue was $1.6 billion, which is a 23% increase compared to last year, and then their GAAP diluted EPS of 1.17 and adjusted diluted EPS of $1.28, and the operating margin of 57%. For my investment thesis, I recommend buying 50 shares of ICE for $88 for a total of $4,400. That will be a 2% weight of our portfolio. I recommend this because they have been able to adapt their operations in response to COVID-19 successfully. They have a high operating margin of 52.2%, and they have the highest return on invested capital between their competitors of 11.3%. They present steady dividends, and they have a huge opportunity to grow in digital assets.